Hi guys, I'm Nicola Mackenzie, founder, mortgage and insurance specialist here at DM Mortgages. And in today's video, I'll be talking to you about when in the house buying process you would usually pay your deposit. So to find out more, then stay tuned. Now, before we start this video, guys, if you enjoy the content, make sure that you hit the subscribe button and the notification bell so that you never miss any future uploads. Now, here at DM Mortgages, we do not monetize this channel to give you the best viewing experience. So when the time comes to look at your mortgage or remortgage options, then make sure that you head over to our website, which is dm.mortgage, and there you can book in for a free mortgage consultation with a member of our fully qualified mortgage advice team. Now, this video is part of a whole series of videos that are dedicated to helping you to prepare to buy a property, specifically looking at deposits. So make sure that you check out the rest of the videos in the playlist. Now, the first type of deposit that I'm going to talk to you about is a reservation deposit. Now, this is more common with new build properties. So if you're purchasing a new build property, then the first type of deposit that you'll probably have to pay is once you've reserved the property. So often new builds even, will ask you to put down a reservation fee of typically around £500. Now, this sometimes also happens where you're buying a resale property, but it's much less common in that event. But some estate agents will ask you to put down a reservation fee in order to reserve the property as well. Now, make sure if you are being asked for a reservation fee, ideally you want that money to be reserved or reduced, from the purchase price of the property. And also, it's a good idea to try and ensure where you can that that deposit is refundable should the property purchase for whatever reason not work out. But that's usually the first type of deposit that you may have to consider paying. I'd also say as well that with a resale property, it's quite unusual to have to pay a reservation fee to take the property off the market. So in that particular scenario, again, I would just make sure that you check the terms and conditions of that deposit that you're being asked to put down, because if you find that the terms are unfair or not quite right, then you know there are plenty of other properties that are out there. So like I say, it's more typical with new build properties, but you are sometimes still going to need to pay a reservation fee. Now, once you've paid any kind of reservation fees that might be applicable to a particular property, then it's not actually until one of the last stages of the process that you're expected to pay the bulk of the mortgage deposit, assuming that you're using a mortgage, or the property deposit if not. Now, the point of which you would hand over a large percentage of your deposit is when you do something called exchange contracts. Now, I'm not going to go into a lot of detail in this video about how exchange of contracts works, because I have got a whole video about that topic. But in summary, exchange of contracts, if you're buying the property in England and Wales, is one of the last stages, as I mentioned. And that is a point that you would cover off with your conveyancer or solicitor, and where all parties have agreed that they are still happy to make this transaction happen. And that is the point where you are legally committed to buy that property. So often I get asked the question, when am I able to back out of this purchase? Right up until exchange of contracts would be that point. But as soon as you exchange contracts, you are legally committed to purchase that property. Now, when you exchange contracts, assuming you've purchased the property using a mortgage, you would have had your mortgage approved by this stage, and all of the boxes would have been ticked in terms of the seller's happy, the solicitors are happy, the bank's happy, you as the buyer should be happy at this point. And at that point, you would usually hand over 10% of the property price as a deposit, okay? And this is usually referred to as the exchange deposit. Now, 10% of the property price may not be the whole deposit that you've agreed to put down as part of this purchase. So if you're using a mortgage, and let's say that you have agreed in order to secure that mortgage to put down a 30% deposit, let's say that we're talking about a property purchase of £300,000. So 30% of that would be £90,000. But your exchange deposit, usually on exchange, you would be expected to put down 10% of 300,000, which would be £30,000. And then the rest would be advanced on completion. Now that 10% is negotiable between parties. So in some instances to exchange contracts, you might be asked to put down more or less money, but typically 10% is the minimum that's required in most cases. Now another thing to bear in mind is that exchange of contracts is, like I say, usually the last stage before you complete on a property. So exchange is where you're legally committed, completion is where you get the house keys, everything is concluded and you can move into the property. Now, the difference between those two dates is important because sometimes people will complete an exchange on the same day. Of course, if you're doing that, then you'd pay all of your deposit. If you're exchanging but not completing for another week, 2 weeks, etc., that's where usually it would be a percentage of the mortgage deposit, assuming you're using a mortgage, okay? So again, this is going to vary, but typically one of the last stages, and when you exchange contracts, you will have to put down a deposit. Now, certainly if you're buying a new build property, on a new build, you will usually put down, again, 10% of the property purchase price in order to reserve that property. And that is even where the property may not even be built in some cases if you're buying off plan. Now, an average timescale to reach exchange of contracts, according to Halifax Bank, is 12 weeks. And I would say in our experience, that's a fair average timescale. So it's quite some time until you are legally committed to the purchase, but also have to hand over a significant sum of money. So you've got quite some time from the point where you have an offer agreed on a property. Now, the exception to that, as I mentioned, is if you're buying a new build property, because if you're buying a new build property, often builders will ask you to exchange much quicker than that. Most builders will ask people to exchange contracts within 28 days after reserving the property. Now, I would say that that is probably one of the disadvantages of a new build purchase. Builders do tend to do that in a lot of cases to help with their cash flow. It's not necessarily in the best interests of the buyer, but ultimately it's something that majority of new build companies ask of. So it's really something that you have to comply with if you are buying a new build. Now, another point that I'm going to mention is that even though the deposit doesn't physically get paid until exchange of contract or a percentage of the deposit, you have to be mindful that some mortgage lenders will ask you to evidence that you have those funds available. Now, as brokers, to satisfy our regulatory requirements, we have to see evidence of the deposit straight away. So if we're applying for a mortgage on your behalf, before we send that application to the bank, we have to check and verify that you have those funds readily available. And I mention that because sometimes I've had people come to me where they've had an offer agreed on a property, but they're saying, oh, because we knew it wasn't due until exchange of contracts, we were planning on using next month's pay packet after we apply for this mortgage to put towards the deposit. And that just isn't advisable for many reasons, because not every lender will ask you to demonstrate that you have the funds available, but a lot of them will, and they're not going to approve the mortgage unless you can demonstrate that. So one other tip I would just say, even though you don't pay until exchange of contracts, I would encourage you to make sure that you've got the funds readily available at the point you have an offer accepted on a property. As a viewer of this channel, I assume that you're considering purchasing a property in the near future. So it's important for you to know that DM Mortgages are an award-winning team of fully qualified mortgage brokers that provide advice to clients all over the UK. Now, we spend countless hours making free content for YouTube and other social media platforms to help to give you guys sound and useful information to make sure that you're in the best position to make informed decisions. To support this channel, when the time comes for you to consider your mortgage options, we want you to book a free online mortgage appointment with a member of our fully qualified mortgage advice team. Because without your help and support, keeping this channel going simply isn't possible. Now, we searched thousands of mortgage products from high street and specialist lenders to find the right deal for your circumstances. And we also provide a free will writing service to every DM client. So head over to dm.mortgage and book in for a free mortgage appointment when the time comes. And also make sure that you subscribe to this channel if you find the content useful. But for now, let's get back to the video. Now, next I want to talk about buying a property at auction, because your deposit is due at a different stage when you're buying a property at auction. Now, when you do that, your deposit is due much sooner in the process. So this is why I always say, I get a lot of first-time buyers say, should I buy at auction? And, you know, we do help first-time buyers who buy at auction. But the one thing I would say is that it is not for the faint-hearted, okay? So if you're buying at auction, you really just need to get advice to know exactly what the pros are, the cons are, and the risks involved are. But firstly, let's talk about traditional auction methods, because with traditional auction methods, generally speaking, they are typically favoured by cash buyers, experienced investors. Now, when the hammer falls on a traditional auction, the successful winner of the bid is legally bound to the purchase from that point. And that is why I say it's usually something that's favoured by experienced investors or cash buyers. Because where you have a mortgage involved, of course, there's only so much influence that you're going to have on when that mortgage lender approves a mortgage. Also, the time scale is a bit more drawn out, because you have to get certain searches done when you're buying using a mortgage that you can sometimes skip if you are a cash buyer, for example. But ultimately, when the hammer falls, then at that point you must pay a 10% deposit in most cases of the purchase price of the property on the day of the auction. And then you have sometimes as little as 14 days to complete on the transaction after that point. Obviously, it depends on the auction house. Some might say 28 days, some might say 40 days, but usually it is within a very quick time scale. So for that reason, just be very mindful where you are using an auction. You know, they are great for many people. You know, you can walk away with a bargain, but it's just worth remembering that contracts are exchanged on the day of the auction, and that is where you would usually pay a 10% deposit. Now, if a buyer pulls out of the sale after that point, or the seller, then again, there is a risk that you can lose that deposit. Now, with more modern auction methods, there's a bit more generally flexibility for the buyer, because they're not, you know, the way some auctions work, the buyer isn't legally committed on the day of the auction. They simply have an exclusive right to purchase the property, okay? Now, on the day of the auction with a more modern method, then the successful bidder, however, usually is still required to pay quite a significant fee that is often non-refundable. So 5% of the purchase price, which is much better than 10%. But again, if it's non-refundable, then that is again a risk in itself. So you just, if you're buying at auction, need to be mindful that your deposit or part of your deposit is usually due much sooner, and you need to understand the terms and conditions of the auction house that you are buying from, so that you can go into it with your eyes wide open, you haven't got any surprises, and you know exactly what the risks are with the deposit that you're having to put down, whether that be 5 or 10%. So guys, there is so much to understand about the house buying process, and again, this is one of the reasons why you should work with a good broker like DM Mortgages when you come to buy the property, because it's not just about getting the best mortgage deal, it's also about avoiding costly mistakes, knowing the pitfalls, the risks, the advantages, the disadvantages, and that's something that you're only going to get by experienced, good quality brokers. So on that note, DM, our team are here to help you to purchase a property, review an existing mortgage, and put you in the best possible position before you embark on the house buying process and throughout. So make sure that you head over to our website, because we search through thousands of mortgage products to find what's right for you in your situation. And like I said, provide comprehensive advice on the house buying process as well. So head over to dm.mortgage, book in there for a free of charge mortgage appointment. Make sure that you subscribe to the channel and hit the notification bell if you found today's video useful. Check out the rest of the videos in this playlist, and I'll look forward to seeing you in the next video.